In 2020, if you bought Bitcoin right after the halving and held for 18 months, you made 700% returns. That's turning $10,000 into $70,000. But right now, the biggest names in crypto are saying that same strategy will never work again. Matt Hougan from Bitwise says the 4-year cycle is dead. Charles Edwards from Capriole Investments agrees with him. Pierre Rochard says it's completely over, and there are many others to agree to. Here's why this matters to you. If these experts are wrong, you could miss Bitcoin's biggest move ever. But if they are right, you could waste years waiting for gains that will never ever come. Is the Bitcoin 4-year cycle still on, or is it dead and buried? Today, I'm showing you both sides of the argument with real data, what the on-chain metrics actually say, and the exact strategy that I'm using, no matter which side wins. As usual, I'm not giving you any financial advices here, and I encourage you to do your own research. First, let me explain this 4-year cycle that's made people millionaires. Every 4 years, Bitcoin goes through something called a halving. The rewards that miners get for securing the network get cut in half. That means less new Bitcoin enters the market. And guess what? Less supply plus steady demand equals higher prices. It's that simple, really. And the results have been insane. After the 2012 halving, Bitcoin jumped from $12 to $1,000. That's 95x. After the halving in 2016, from $650 to $20,000, 30x gains. And after the 2020 halving, from about $9,000 to $69,000, approximately 7x gains. And after the latest 2024 halving, 65,000 to 120,000 in the current cycle, and we're not even finished yet. The pattern was so reliable that people built entire investment strategies around it. Buy after the halving, hold for 12 to 18 months, then sell near the peak, and then wait for the 70 to 80% crash. But in 2025, something's different, and the experts are split on what it means. Let me show you why some of the smartest people in crypto think this cycle is finished. Reason number one, math just doesn't add up anymore. Here's the brutal truth. 95% of all Bitcoin has already been mined. We're only creating 450 new coins per day. Compare that to the 20 million Bitcoin already circulating. Each halving now affects a very tiny fraction of a total supply. It's like trying to drain a swimming pool by turning off a garden hose. The impact keeps getting smaller and smaller and smaller. The reason number two here is that the institutions rolled in. In January 2024, Bitcoin ETFs launched, and as of the end of September this year, they've brought in over $150 billion. These aren't teenagers panic selling on Robinhood. These are pension funds and hedge funds that buy and hold for years to come. They don't care about 4-year cycles, they care about decades. Reason number three, the TradFi integration. Bitcoin's correlation with the Nasdaq hit 0.87 in early 2025. When tech stocks go up, guys, Bitcoin follows. When the Fed raises rates, Bitcoin falls with everything else. The cycle used to be driven by Bitcoin-specific events in the past, but now it's driven by the same things that move your stock portfolio too. All these reasons make a pretty compelling case, I admit. But the other side has some shocking data that changes everything. Not everyone's convinced the cycle is dead, and their evidence might surprise you guys. One of my favorite crypto data sources, Glassnode, tracks when long-term Bitcoin holders start taking profits. And right now, their data looks exactly like 2017 and 2021. Another interesting point, US presidential elections happen every 4 years, as you know. Stock markets tend to rally in year 3 of each presidential term. Bitcoin halvings align almost perfectly with these presidential cycles. And maybe Bitcoin isn't breaking free from cycles, maybe it's joining the bigger political and economic cycle. Let's take a look at the supply shock theory too. Yes, 95% of Bitcoin is mined, that's true. But here's what matters. Only about 2% of Bitcoin actually trades each day on-chain, while that figure for off-chain exchange trading is approximately 8%. So even small changes in new supply can move prices when most Bitcoin never really moves. The supply shock theory still works. It's just more subtle now, I would say. So we have smart people on both sides with solid arguments. But there's a third possibility that might explain everything. What if the cycle isn't dead or alive? What if it's just growing up, evolving? Think about technology adoption. Early internet stocks went up 1000%, then crashed 90%. Now, tech stocks go up 50% and drop 20%. Bitcoin might be following that same path. Early cycles lasted for 4 years with 95x gains and 84% crashes. It's possible that the current cycle extends to 5 to 6 years with about 10x gains and 30% corrections. And if we look into the future, the next cycles might turn out to be as long as 6 to 8 years long with 3x gains and 15% pullbacks. On top of that, more institutions means more stability. Less retail panic means smaller crashes. This isn't the cycle dying, it's the cycle maturing. It's like Bitcoin is graduating from college and getting a real job. Less wild parties and more steady growth. Looking at the current cycle, we are seeing the following. Longer time to peak, 18 months so far instead of 12, and I'm absolutely convinced we haven't topped out yet. 2. Higher base prices, $65,000 instead of $3,000 or even $40,000. And 3. Smaller corrections. We saw a 30% drop from January to April this year. It's true that we haven't reached the peak yet and the proper correction hasn't followed, but I doubt it would be as dramatic as 80% in the past. The pattern is still there. It's just more mature, I would say. So, what does this mean for your Bitcoin strategy? Here's how I'm thinking about it. If the 4-year cycle is dead, then dollar cost average becomes king. Regular buying beats trying to time the market. Then I would say hold for longer periods. Think years, not just months. And be realistic. Lower your expectations. 3x gains instead of 30x. What if the 4-year cycle is actually evolving? Watch on-chain signals, guys. Realize profit, long-term holder behavior. Extend your time frames, 5 to 6 years cycle instead of 4. And prepare for milder moves. 50% gains from here and 30% drops. And finally, in case the 4-year cycle continues, traditional timing still works. Basically, buy after halving and sell at the euphoria. Watch for classic signals. The media hype, retail FOMO, extreme valuations, and ultimately prepare for volatility. 70% and more crashes are still possible. Here's what I'm actually doing. I'm betting on the evolution theory. 60% of my Bitcoin strategy assumes longer, milder cycles. 30% hedges for the traditional cycle continuing. And then 10% prepares for the cycle being completely dead. This way, I'm positioned for the most likely scenario while protected against being completely wrong. Regardless of which theory you believe, here are some key things to monitor. In terms of on-chain metrics, an MRV ratio above 3.2 suggests cycle tops. Realized profit peaks when long-term holders sell, and exchange inflow spikes often precede major moves. With regard to institutional signals, ETF flows. Are institutions still buying or taking profits? Corporate treasuries too. Are there more companies that continue to adopt Bitcoin or fewer? And, as much as we hate it, regulatory news. Are governments positive or cracking down again? Somewhat related to the last point are also the macro factors. What is the Fed policy? Rate cuts boost Bitcoin and rate hikes hurt it. Dollar strength. Weak dollar often means strong Bitcoin. And lastly, the geopolitical events. Crisis, I remind you, drives safe haven demand. I personally check these on a weekly basis. When multiple signals align, that's when I adjust my strategy. To be fair, I try to cram in as many important practical factors as possible, and if you're looking for more of this approach, then I would really appreciate if you hit that subscribe button. It helps myself and the channel a lot. So, what's the final verdict now, guys? Well, whether Bitcoin's 4-year cycle is dead, alive, or evolving, Bitcoin is still the best performing asset of the last 15 years. The smart play isn't betting everything on just one theory. It's positioning yourself to win regardless of which scenario plays out. What do you think? Is the cycle dead or is it just growing up? Drop your take in the comments, and I'm very curious to read all of these. I'm Stan, and I thank you for watching airdrops.com. Till next time, see ya.